Next thought, a video that makes you see this world differently. How's it going, ladies and gentlemen? Welcome back to Next Thought. In this video, I'm going to reveal my recent portfolio change. I know it's been a while since my last update for my portfolio, so a lot of you, especially my audience, my subscribers, you're always asking me like what are the stocks I bought and what are the stocks I sold. So here, I would like to make just an update for you. But before we get started, just again let you know, you have to always trust yourself. My tradings, my actions are here just for my personal opinions. It doesn't necessarily mean these are the best choices or best opinions. Therefore, you have to digest yourself and trust yourself to make the best decision by yourself. So first, in my portfolio, the biggest position has changed from the VMA to Palantir. Palantir here is a huge thing. I believe everyone in this world knows its crazy movement recently. So in just 1 month, its stock price goes below from $10 and now it's 29. Therefore, just 2x gain in just less than 1 month, and that is a huge deal. So previously, I actually bought a lot of shares for Palantir. So the first is around $9 and second is around $10. But recently, when its price goes to $22.3 per share, I still purchased a very huge amount for that. The first two purchasements, the average price was around $9.7. And now after my third purchasement, the average price comes to $13.64 per share. Palantir here is the only stock I can't evaluate its value. This is the only ambiguous stock, one of the most speculative stocks in the market as well. But the reason why I invested in this stock is I just believe that big data. Big data can solve everything. Especially I'm a big data engineer and know what's the value for big data. So there is actually saying the data in the future is just a liquid gold. So for me, I would really like to purchase this. And even after $22.3, yeah, I know it has increased over 100% from my average price, but I still wish to buy more. It's just I missed the opportunity to invest in Tesla and NIO like few months ago. Especially for NIO, the price was just like around $1 to $2, and later it increases to like $7 to $10. And I thought, okay, that's still quite a little bit expensive. And I just keep waiting, and now the price for NIO is over $50 per share. So I believe Palantir here is the same thing. If you think about NIO, can you calculate stock price? No, you can just use like the PS to calculate its price based on, for example, Tesla's PS. Since it's even not profitable, point here is nowadays, investors need to spend the money. So they would like to spend something with broad idea, with a revolutionary technology such as NIO, Tesla, the EV, and also, for example, the Palantir, the big data. It's even better for these companies to be not profitable, since as long as it's profitable, you can calculate, the PE ratio. But as long as you can calculate the PE ratio, then it's not good actually for the stocks. Therefore, the better scenario here is they just keep making more and more revenue while just don't be profitable. And investors, since they just can calculate, the company's price, and they will just put more money on it. So I know you would ask me what's the target price for Palantir. And I can just tell you, I also don't know, but I just purchased it. But if you ask me again whether its stock price would drop below $20 per share, I would really doubt that. I just don't think the price would just drop below $20 again. But if you ask me for the next 3 to 5 years, where the price would go, I would say like at least $100 per share. That's very possible. Since Palantir here, the data can really solve a lot of things, especially to reduce the internal costs for most of the companies. And when more and more customers, especially for those enterprises, realize its capital, realize its ability, and realize its value, then the price will just be higher. Another reason why I invested in Palantir is because previously there was few series of funds invested in Palantir, and the market cap for Palantir by those virtual funds were basically the same as the market cap when it's at $10. Here's a very simple logic. I believe Palantir's market cap, its value definitely increased a lot during these 5 years, but its market cap just remains the same. So I'll be more than happy to purchase more Palantir shares at that time. The second largest stock is VLT or VMA. VMA just released its third quarter financial report yesterday, and its stock price dropped over 8%. For me, this is a ridiculous stock. As you can see, I put the most value in it. So this is actually my largest stock. If Palantir doesn't increase over 100% in my portfolio, Viomi is still the largest portion in my portfolio. So here is the most ridiculous thing for Viomi. Their balance sheet is awesome. Their shareholders' equity is over $200 million. But if you see the market cap for Viomi just yesterday, it's just around $400 million. That is to say, over 50% of the market cap or the valuation is actually in the shareholders' valuation. And especially they still have two-digit growth for this year, over 20%. That is awesome. So probably the concerns for most of investors here is whether the business model is sustainable. Because I believe a very significant reason for their huge drop yesterday was because of the guidance or the outlook to the fourth quarter. So it just from 9 to 14% revenue growth year over year. So I believe for most of the investors, they just don't think these are good numbers. In the pandemic situation, can you tell me how many traditional companies can have an even over a 20% year over year growth for the revenue? And also, their net income is still positive. So guys, this stock is absolutely tremendous. They have a very great potential. If you're curious about the detailed analysis for the business fundamentals, I do encourage you to visit another video I made previously. The third biggest portion in my portfolio is Qualcomm. I would say Qualcomm is the most successful investment I've ever made. Probably you would like to ask why it's not Palantir. For Palantir, it's quite speculative. I would say, yes, I did bet a lot on this stock and there's some luck for me to gain some profit from this stock. But for Qualcomm, I've seen clearly what's the path for Qualcomm in the future a long time ago and invested in Qualcomm like 2 years ago. And therefore, even though its profit is not the highest, it's just the second highest, but I would still say Qualcomm is the best investment in my portfolio. Next comes to the fourth biggest portion, and that is Micron, or take the simple MU. Previously, a lot of people are always saying or always complaining that Micron is kind of commodity stock. Yes, it is a commodity stock. Its price are just fluctuating all the time. But especially nowadays, more and more media are coming out and saying that the recovery for pandemic will be a blossom time for Micron because a huge needs for data centers such as Amazon's AWS, Google Cloud, and also Microsoft Azure. So yeah, that's definitely a thing, right? Yeah, actually, I've already predicted this situation a long time ago when I invested in Micron. I know 5G would definitely boost Micron's business, and the 5G, they need to process a lot of data. Yeah, I'm a big data engineer. I know it, and I know the importance of RAM, especially DRAM, for those servers. And if I just invested very hugely in Micron before, and now, yeah, it's not bad. There's a trend that the demand for the DRAM is increasing and the profit is over 40%. It's not bad. The fifth is Dropbox. Dropbox, I would say, is just a very similar thing like Viomi. Though the balance sheet is not looking as good as Viomi, since for me, Viomi, for me here, is a purely value player. But for Dropbox, it's still kind of value player, but it's not that value player. And just yesterday, Slack, or take the simple work for the stock, is skyrocketing for over 40% for the stock price because of the merge or purchase by Salesforce. And if you see nowadays the online business products, Slack, Zoom, everything, the price is just skyrocketing. But for Dropbox, yeah, the price just remains the same. However, the growth is still there. The needs are still there. People are loving it. They are putting more and more money into R&D and making the product more user-friendly and better. So if you ask me whether the stock price will still be like $20 per share in the next 3 to 5 years, I would definitely say no. Okay, next stock, TDOC, or take the symbol TDOC. I purchased TDOC for 2 times. The first was at $171 per share, and second is $180.9 per share. I know in the last video, I talked that I would consider to purchase the TDOC stocks at around 150s, but later, I just can't help resist my passion to this stock. I know the medical situation in the United States, I know you always have to queue, have to make the reserve to the doctors, and I believe TDOC definitely have a very huge bright future, but I would still say their valuation is a little bit high, but after considering like the trade-off, since they have a huge market, a huge need in the United States, and though their price is a little bit high, but I still consider to buy that, especially the ARK Investments is invested hugely in the stock. And another reason is I really want to purchase a medical related stock in my portfolio. I'm not a medical guy. I really don't know too many things in those areas. However, for this stock, yeah, they're in the medical area. However, they are more like a tech company. Therefore, I understand the business. It's very easy for me to understand. And I just invested in this stock. And next is China Mobile. I'll take the symbol CHL. I purchased again with a price of $30.5. This is the stock that dropped the most in my portfolio, but I still believe the long-term gains, especially nowadays, the dividends yield is 7%. That's quite high. And for me, I fully believe the market in China for 5G, since 4G United States or Europe is taking lead, but for 5G, China is taking definitely a lead in that area. I'm from UAA, electrical engineering, and I also took some courses related to the telecommunication. Therefore, I understand the business, I understand how bright the future is, and I just fully believe in 5G. Yeah, I just invested in this company and take those very excellent dividends. And next is Alibaba. I'll take the symbol BABA. In the last video, I mentioned I would definitely purchase more BABA shares when the stock just drops around 250s, and I finally got a chance and I purchased the BABA stock at $258 per share. So just for a very easy earnings per share model, its price can easily hit $400 to $500 per share for the price today. And therefore, even though there is some short-term difficulties for this company, but in the long term, I just believe the future, and I'm very happy to purchase more for this stock when it drops even below $230 per share. I will just purchase more. I love this stock. And next stock, Under Armour Class A share, or take the simple UAA. I purchased these stocks for 2 times. The first is at $14.1 per share. A second time is around $15.5 per share. After comparison between Under Armour and also Nike and also Adidas, I do believe Under Armour here is trading at a very cheap value. So probably in the previous few years, the stock just drops a lot. It is because they're not just focusing on the outdoors or the activity wears, but recently they just changed their direction, especially in this pandemic. They just shifted a very huge turn. And I believe, yeah, they're already after the pandemic. And I believe this stock price just won't below $20 per share for the next year. I just don't believe so. Next stock, MOMO. Previously I made a video, and that is the best social media stock to invest, and that is this stock. I won't talk too much about this stock in this video anymore, so if you're interested, just visit that link. And last but not least, DOYU. DOYU here, I believe, is a very good buy. I purchased the stock at $14.45 per share. It's the smallest position in my portfolio recently, and I'll be more than happy to purchase more to increase its portion in my portfolio if its price keeps dropping. Since I believe the merge for DOYU and Huya, the 2 biggest Chinese online video platform companies, after the merge, they can reduce a lot of internal costs and make their business model very successful. And especially the big dog behind these 2 companies is Tencent, the largest video game companies in this world. Okay, I think I've talked too much about the stocks I bought, so I bought 7 stocks in total, and also I sold 4 stocks. The first is Trip.com. I sold it at around $36.1 per share, and second is Amex. I sold it at $14.2 per share. I've told that I've sold these stocks in the video, the vaccine trap, and also I sold off Intel because of the Apple's M1 chip. I previously still believe in Intel, but now just not 100% sure, since I can find a lot of other greater opportunities such as DOYU and MOMO. I believe their future is much brighter and more certain than their future, than Intel's future. Therefore, why don't I just invest this money than those better companies, better opportunities that I believe. And fourth stock is NetEase. So NetEase is the second largest video games in China. So I want to shift the value in the NetEase to DOYU, which is because for NetEase, yeah, though they can make a lot of money from the video games, but I just I really don't like the games, you know. I do play computer games, but I just never ever play their computer games. Then that is, I mean, since I think that's just too boring. But I don't know, probably it's just like a trend for some young people. They just love their video games, but for me, I just don't. Therefore, I would like to invest in something that I'm more certain in, and that is the video streaming platform companies. And with all these transactions, for the unrealized gain in my portfolio right now is 21.5%. That is not bad. And if I don't sell off the Trip.com or Amex, my portfolio's gains will be much larger. So from March to now, my total gain for the portfolio is around 75%. So yeah, I did purchase some shares and sell them out after making some profits. So I think this is a very good start for me, especially my portfolio. After investing in the stock market for 2 years, I understand a lot of things and learn a lot of knowledge in this area. And I believe in the future, I will keep the concept for long-term investing in my strategy. Thank you for liking it. See you next time.